What's up, everybody? Started recording a little bit into this call. I just wanted to showcase that we've had 1, 2, 3 buy signals run up and hit their respective take profits. This signal was issued 2 minutes ago at 11:13, and 2 minutes later, from 45,745, which is where you would have got in, to take profit 1. That's a 1-to-1. So within 2 minutes, if you risked $100, you would have made $100 within 2 minutes. In 2 minutes. Now, that's just going off of that one signal. Okay? The same thing would have happened at this second buy signal that you see right here. Same thing would have happened. Now, coming to TradingView itself, same thing would have happened here within the next couple of minutes. All of these are pyramid entry points, you know. I just wanted to show a little bit of this off. You know, this is the 1 minute time frame, and these signals are accurate. You know, you don't want to take every single signal because this is an AI. It's going to make mistakes, right? And people, yeah, we make mistakes. That's why we have a stop loss. But what I'm saying is that this is a confirmation with whatever strategy it is that you have incorporated into your trading style, into your personality. Can increase your win rate. If your win rate's 50%, this can increase your win rate to 70%, 80%, 90%. I just passed the verification phase 2 with FTMO with 100% win rate. I'll prove it. If you ask me, oh, where's the proof you got 100% win rate? You know, show me what FTMO said. I will show you. I'll show you. I'll send you the screenshots. I got them. You know, I've been doing this for close to a decade now. You know, I've got 7 years of experience in this. And that's why I finally decided to take the way that I look at the market and simplify it. So that way everybody can see it for themselves, you know. Everybody can see exactly what I'm looking for. And you can see right there. You know, this is about to hit take profit 2. It's calling another buy signal right here. And with that wick, we just hit take profit number 2 on this one buy signal within 6 minutes. 6 minutes, you could have made $200. 6 minutes, you could have made $2,000. Within 6 minutes. Is that too long? Is that too long to change your life? You know, we're asked, you know, is 2 minutes a long time? You know, we ask people that all the time, is 2 minutes a long time? 2 minutes a long time? 30 seconds a long time? You know? No. This was the length of 2 rap songs. You know, if we're listening to Juice WRLD, the amount of time that has passed from the issuance of this buy signal until the present moment is 2 songs. The length of 2 songs. Tell me you can't do this and listen to music. Tell me you can't do this and drink coffee. Now, everybody's got their own fancy schmancy formula, okay? And I got my own fancy schmancy formula. Everything that I teach, everything the way that I trade is based off of the Inner Circle Traders concepts, ICT concepts, right? I made this indicator to make it simple for you. Not everybody is going to understand fair value gaps, inversion fair value gaps. Not everybody's going to understand order blocks, breaker blocks. Not everybody's going to understand consequent encroachment, event horizon. Understand these things. I understand that most people want it to be simple. They want to have a very simple strategy. They don't want to be looking for, you know, a whole bunch of different stuff. They just want a couple of things that they should be looking for and something to tell them what to do. Because if there's nobody standing there telling you, hey man, push the button, you're not going to fucking push the button. anything. You're just going to stand there and go, oh, well, I wish. Oh, well, what if? You know, that's all you're going to do. But I'll have you guys here for a moment. I'm going to go ahead and turn the indicator off. I'm going to talk about a couple of things. So the thing that I want to talk about, I'm going to hide my drawings too, is I'm going to talk about candle structure, the way a candle forms, and I'm going to talk about market structure. So the way that a candle forms is really simple. All right, and I'm going to go into my actual chart here, and I am going to change this up for you so that way it's a little bit more visible, looks more pleasing to the eye. I think you guys will like this. Okay. Yeah. Okay. So the way that a candle is created is really simple. Right? We have a wick, a body, and a wick. And we got black candles and white candles. White candle means bullish, black candle means bearish. We already know this, but we always want to rehash the basics in case somebody brand new is watching this content. All right, and these concepts have been around since Munehisa Hama came up with them when he was trading the rice trade in Japan. Okay, and he's the most profitable trader in the world. That's why charts are looked at like this. So the way that a candle is going to form, right, we have a 4-hour candle. The reason I'm showing you the 4-hour candle is because we are intraday traders, and this and the daily candle we are inside of, right? This is what we're inside of trading. We're trading all of the structure inside of these. Every single one of these candles is 4 hours of information, okay? So this is the 6 o'clock candle. This is the 10 o'clock candle. If I go through and I show you that this candle begins here and this candle ends here, and then I go to the 15-minute time frame, you can see that we have structure form if we go down to a lower time frame. All right, you can see on the 3-minute, inside of that one big push down 4-hour candle, we have structure. Lower high, lower low, lower high, lower low. Okay, we have structure with inside that candle. So with inside candle structure, there is market structure, as we're intraday traders. So a candle is going to form wick first, body. When you candle and it pushes bearish, it closes bearish. More than likely, that next candle, right, is going to create a top wick before moving on, right? So we have this hour, new hour. I'm going to change it to blue, right, from 6 to 7. So if we look at the 6 a.m. candle, because the previous candle is bearish, we can see that based off the structure, right? You can see how it comes into this swing up right here and forms a high, create top wick. It consolidates, right, during this time. And then we see our move, okay?
Yo.
What's up?
You tell me, what you looking at right now?
Not much. I was just walking
down,
in some things, you know, market structure and whatnot.
Okay. You got 7 a.m. New York. Oh, is that wait? What? Is that that's like a week ago.
Yeah.
That's right. Oh, that's Friday. Okay.
Yeah, I was just doing some. While I had a moment of just me on here, I was just explaining some stuff. What I was explaining was that inside of a large, like say large bearish 4-hour candle, this is the example I'm going over, that you're going to zoom into the lower time frame and see that it's structure and it forms as structure.
Right. Okay.
That's basically what I was explaining, because I'm going to take this content and put it not like this part of our conversation, just what I was talking about previously, and I'm going to put that in the courses in the community. When I recorded the videos for candle structure and market structure, the audio did not save with the software that I used because I was trying to use Zoom to record it, and so I had to delete them, and now I'm kind of redoing them.
Okay, I got you, man. Well, I'll just go on mute and I'll just listen then.
All right.
Unless I have a question.
All right. Yeah. Or if you want to chime in, feel free. You want to chime in, feel free.
I got you.
Yeah. Let me remember and pick up right back where I left off. But okay. Okay. Yeah, I was about to mark this up. I'm trying to separate the hours here. I just want those hours separated. So if I go into the 1 hour chart, we'll see all these with a bunch of lines on them. Should work. And what I've highlighted is the open and close of each hour on that smaller time frame. I wanted to come on and show you what it looks like on the one, so the way you can grasp the perspective of understanding that the market is fractal. So the patterns that you're seeing occur on the 1 minute, the 3 minute, the 5 minute, so on and so forth, you're going to see those things occur on the 15, 1 hour, 4 hour daily chart. It's going to happen everywhere. So going back to the 3 minute here, I'm going to go to our zone, switch time frames if it did not stay. So the 1 minute time frame is our entry time frame. This is where we study the nuances within the behavior, and we look for the things that are going to give us the best sort of precision whenever we're executing these trades. And in that market structure that is formed, there's going to be places that algorithmically drive back to. Like I've been saying in these videos for a while, it's the same thing that ICT says: price is not controlled by buyers and sellers. It's not. Price is controlled by an algorithm, and it's going to go where the money is. And our job as traders is identifying where the money is, where is the liquidity. That's what it's called. So really easy way to do that is to understand where price is going to trade. Price is always going to trade within fair value most of the time, at equilibrium, right? There's a bunch of different names for it, but fair value is what we'll call it. And as you can see right here, this fair value gap that was issued at 6:38 in the morning got left alone for a really long time. An hour and a half it got left alone for before it came back and traded within that fair value. And these are the key points that are going to have the market create its structure. These are the key levels in which you'll see price react, return to. These are the things that you want to notate, and then when it is at this level, that's when you study the nuances. Once it's given you what you want, you study the nuances, right? A common question I get asked all the time is, well, if you know that it's going to go back up here, why don't you just buy it up to that point? Well, that's not the analysis. Okay, the point of the analysis is to be able to practice discipline and patience, and to be able to have the understanding that it's okay to be wrong. And the moment that you involve any kind of money in this interaction, you're going to be involving a different level of emotion that you're probably not ready for. And so that's why we will tape read. That's what you learn to do first. You learn to tape read. And you learn these things. You learn about fair value gaps. You'll learn about order blocks. We'll talk about that in a call. But this is the simple thing that I wanted to go over today, so that way you can understand the areas in which where price will want to form these higher highs. Let me get my brush here. Right. I'm sorry, these lower highs are lower highs, because the downtrend. These lower highs here, and these lower lows. This is how most retail traders are going to identify all of this to you, right? This is how every single trader looks at it, right? Somebody who understands these concepts will understand the of the market, and it is continuous bearish movement, liquidity. That's where the money heads, and that's why the order flow is continuously being driven in that way, because price is being coded to take out all those stop losses. It's in the code to act at that specific time. So understand that even though price gets to this level, it's not about it getting to this level, it's about when it gets to this level. Okay? That's what it's about. So, at 7 a.m. is when we'll see that true market open for the New York session, which happens right here. Okay? That's where it happened. It happened right here. And that's usually when you want to be getting on to look at these things, to identify these things. Right? If you're going to trade market open, you want to get a market and actually do something before they decide what the price of milk is. This is the best opportunity to do it. You can have your money made before you go clock in at your 9 to 5. Because you're not going to get on here and sit here for 6, 8, 9, 12 hours. You know? If you're doing that, you need to fix your dopamine deficiency. Get off the blue screen. Now, what I want you to understand is that we saw a reaction here. We saw the rejection complete itself by 758, because this low was broken and invalidated. Okay? And so if I were to be able to go onto a lower time frame, like the 15 second, I would be able to show you this right here and this right here are both examples of what I'm talking about happening on that lower time frame. Right? These lower highs, these lower lows, the downtrend, those concepts. This inside of here is where it formed first. And then we see the big push. That's what I mean when I say that the market is fractal. Right? If I had multiple charts up here, it'd be a way better of an example. That looks very clunky and cluttered to me, so that's why I don't do that. And I just do it one at a time. And that's the basic of the basic things that you want to be looking for. There are other things and other nuances that do occur, like what we have going on right here. Let me go ahead and delete all these drawings. Remove 17 drawings. So what we have going on right here is pretty interesting. This is what's known as relative equal highs. We have sitting right here. And then down here, we have relative equal lows. And so when price consolidates in this manner, it gives us what's known as a turtle soup. Okay, and this is important. This is an understanding that for this period of time from 8:59 to 8:10. So for 49 minutes, we had consolidation occur, or accumulation, whatever you'd like to call it. And then once that occurs, and we see the actual break, saying we get that break of structure, it presents to us a inverse fair value gap. And this is where the short-term money was sitting. This is where price wants to trade. This is where the orders are waiting. Once those orders get filled, price goes up here, boom, 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 boom. Then the code reacts, and as you can see, it continues on down. I'm not going to get into a bunch of the nitty-gritty of explaining all about fair value gaps. I just want you to understand that this is the key level in which you want to watch price come back to and form that lower high. Because if you look right here, this is why I'm putting emphasis on this. High, high. One is slightly lower than the other. We got a low right here, and a low right here. One slightly lower than the other. It's very simple. It's very simple. This is not complicated. The name just sounds fancy, and if that fanciness in the vocabulary intimidates you, get over it. Adapt. It's not cool to sound ignorant. But I greatly appreciate you guys for hopping onto this video to be able to have a better understanding of the way that the market actually forms itself, the way that it behaves within just a general concept. I appreciate you guys for hopping on here and getting 1% better. Do that every single day, and maybe you won't be broke anymore. Maybe.